Hello everybody, this is AK. I'm back. So this was something I was more sensitive to as a trader back in the day, when I was actively trading in the stock market. And as an investor for income, I'm less sensitive to something like this, and that is whether we're in the bear market or whether we're in a bull market, because most of the time I am just staying invested and collecting income. Right? As long as the businesses I'm invested in are still doing well, and as long as they are able and willing to pay me a dividend, a meaningful dividend regularly, that's all that matters to me, right? But from time to time, I want to know if I could add to my positions, right? Everything else being equal, I mean, if the business is chugging along nicely and if the market goes into a depression, yeah, that's when I think it'll be a good time to add to my positions. So on screen, you see the questions. The bear is here. Bring out the war chest now. Yeah, so this is because someone asked me if I bought any DBS shares recently, because it went to $33 yesterday, and at the time of recording, I'm recording this in the morning because I want to get this out of the way before I start my gaming, just to make sure there's a video for the day. So the price that you see later when the video is released in the evening might be different, right? So the price for DBS shares has dipped below $33, and so the viewer asked if I bought any, and I said, well, it's not low enough for me, right? And if you remember, I released a video recently on DBS on when I would buy, and I said $33 was immediate support. And personally, I'm waiting for $30. And if you look at the chart on screen, right, you can see why. Around $30 is is a many times tested support level around there. So that's where I think a stronger support could be found. But in a recent video, I also said that for someone who has yet to invest in DBS and want to get his foot in, because DBS pays dividends 4 times per year, I said that although immediate support was at $33, we could see that break in what we call a whipsaw, and if the whipsaw happened, price could go closer to $32 a share, and that might be a good time to just get our foot in. Right, but for me, because I'm already significantly invested in DBS, I'm waiting to see if the longer term stronger support at $30 would be tested again, and that's when I would probably be buying some. Right, so there is this question about whether the bear market is here, and from this chart you can see quite clearly that there isn't a bear market. What's the definition of a bear market? And that's when stock markets decline by 20% or more. That's a bear market. If a stock market declines by, like, say 10%, 5%, 15%, that's considered correction. It's not a bear market, right? So don't go around shouting that the sky is falling because I don't think it is. And then if we were to look at the S&P, for example, right, which many people look at, the S&P 500 index in the US, for example, it hit a high of almost 4,600 points, I think, back in July. And if you look at it now, it's at 4,200 points. So it has gone down like 400 points. So that's an almost 10% decline. So that's really a correction, right? It's not a bear market scenario. So I wouldn't say that the bear is here, right? But it depends on which market that we are looking at, really. For example, if we are heavily invested in China and we're looking at China all the time, and our portfolio is almost 100% in Chinese stocks, then we might feel that the bear is here, because in the news today in Financial Times, they say that China's stock market drops to pre-pandemic low, right? And the index of large and liquid Shanghai and Shenzhen listed stocks fell to pre-pandemic low. So this is of course not surprising, because back in September we already saw in the news, South China Morning Post, that Chinese stocks suffer record outflows, and there's a massive retreat of international funds from Chinese stocks and bonds, right? And in August, Chinese equities suffered an outflow of around $15 billion, and was the largest monthly outflow on record for the Chinese stocks. So it's not surprising. There's a lot of pessimism around China, and for good reason, like what Mr. Piyush Gupta said, that the problem with the Chinese property sector crashing is actually not overdone. The reports are not overdone, they are actually true. And the Chinese real estate sector accounts for 25% of the country's economy. So if we are heavily exposed to China, then we might have a feeling that the bear is here, because there's dark clouds everywhere, right? But if we take a step back and look at the global situation, it isn't as bad, right? However, there's a wild card, and that's what's going on. It's no longer what's going on in between Russia and Ukraine. It is also what's going on now in Israel and its and what's going on over there, with the neighbors and all that, and how Syria has joined the war. So there's a lot of uncertainty, right? Geopolitical risk. I mean, it's been a long time, right, since the World War II. So if that were to happen again, like what some gurus say, then things could go really ugly. I don't have a playbook for that. I wasn't born until more recently, so I don't know what's going to happen if that. But I know that we should keep more cash, like what MAS said. We just not just because of possibility of internet banking outages, but really because in times of trouble, have cash, keep some gold, precious metals, and I think that is an insurance. Okay, so anyway, before I ramble on, I don't think the bear is here, and I won't be bringing out my war chest yet, but I will keep an eye on the situation as and when, and I'll let you know if I see something. Okay, so that's all for now. Bye bye.